Good morning. This is Alice Lind, and I want to welcome you to our today's webinar devoted to dodges. If you can hear me well and if you can see the picture clearly, please put pluses so I could understand. Okay, as far as I understand, the picture is clear and you can hear me well. So today's webinar I wanted to devote to dodges, and this is part of the continuation of candlestick analysis. Candlestick patterns analysis. Doji is pretty important part of that because every trader who at least once saw the charts of the market, I mean candlestick charts, have seen dodges. They look and you can recognize them really easy. Dodges, here I prepared the picture for you. Dodges look like the cross, reverse cross, and the common feature for them is body of the candle is almost non-existent. So as far as you see here, we see that here is long shadows and non-existent body. Here you see the second variation of dodges, like long leg doji, with the longer shadows and also almost non-existent body. Why it's important and why you need to pay attention to them. Firstly, as you see, they look like the cross or the plus sign. They are not neutral patterns, but they usually are the part of the other long gap patterns. And one on its own, doji is not like showing us the change of trend or change of price or continuation of the trend, but as the part of the other pattern, it can be the sign for action, the sign that you need to open the trade, to enter the trade, either for high, either for low. So dodges are formed when the opening price and the closing price are almost the same. They are almost equal. So let's say here the candle was opened and almost at the same price it was closed. Long-legged doji is almost the same, but shadows are longer. Well, when dojis appear on the chart, it shows the indecision of the market. When the candle is opened, when the market is opened, the bulls are trying to push the prices higher. Only and after that, the bulls, the bears, they reject that and push the prices lower. And it also tells us that bears are also unable to keep the prices on the low position, and at the end the candle closes at the same level that it was opened. And of course the doji can be formed by the prices which were pushed from the start lower and after that higher, and after that they go back to the initial price. So the most important for them that the time that the price of opening and the price when the candle was closed are almost the same. Firstly, when doji appear after the long uptrend, it can be the sign of indecision on the market. That let's search for some example on the market. Here I have 1 day time frame. So as I said, when dojis appear after long downtrend, it may show us the uncertainty of the sellers and the possibility that bulls will take control over the market and that they will start to push prices higher. Vice versa, when dojis appear after long uptrend, it may mean that the buyers are losing control over the market and there some uncertainty appears and the prices can be pushed lower by the bears. So let's switch to the shorter time frame. Okay, that's 4 hours time frame, and let's switch to Euro USD. So these can be counted as doji. You see that the figure looks like the cross with almost non-existent body, long-legged doji. Of course, here is also pretty good example. Here it is. It's on the day close, and here the same. So you see they appear pretty constantly on the market. On the chart with the British pound, it appeared recently at the time of the gap. It's pretty good shown on 1 day time frame. Okay, so as you see at the beginning of the year and the time of the gap when the market opened with a gap, we see doji here that appeared, and you can also switch to another time frame here. Okay, and here it's also appeared at the period of gap. But on the market you can see a lot of examples, because these patterns, these figures appears in the market pretty often. Okay, so it's important, really important to emphasize that doji, they don't show the they don't mean that the pattern gonna the market gonna change, and they don't show the reversal of the market. They mean indecision. Dojis are also pretty often found after the period of indecision, meaning when the market is resting after significant events, significant moving of higher or lower. And after such period of resting, the market continues to move its way. And also, dojis can be interpreted as a sign that a prior trend is losing its strength. Okay, so they are not showing us the change of trend. They are showing us to pay attention to the market, because the trend can change. And of course, that's pretty good idea to pay attention to the market, to pay attention to the further events, to the further candles that may appear on the that will appear in the market. When you see doji on the top of the uptrend, it means that the buyers are losing their power, and the trend may change. So we need to see the further candle in order to understand what's going on. When we see it on the end of the downtrend, it means that sellers are losing their initiative and buyers slowly taking it. Okay, so it may also mean that the trend is about to change. Also, like the part of the doji, we have also two other patterns of the market. That's the gravestone and dragonfly. These patterns, they are more serious, and they can show the reversal of the market. They can the reversal moving. Okay, so dragonfly, as you see it, it has almost non-existent body and a long lower shadow, or wick, if you call it so. And if there is some body, of course the shadow should be at least twice or even 3 times longer than the body. Okay, and here it can be the small shadow also, but the strongest dragonfly doji is without any upper tail, without any upper shadow. And the dragonfly appears when the price of the market opens and closed at the same or almost the same price. Well, it's pretty rare when the price of opening and the close, when the market is opened and closed, or the candle is opened and closed, is the same. Sometimes they differ, but a bit. So the most important part of the dragonfly doji is long lower shadow. Okay, so here we see the pattern, the figure that looks like the dragonfly. I hope you can see it well. So the price of opening and the price of closing was almost the same. Like if there is difference, it's really small. We have the long body, lower shadow, I'm sorry, and really short upper shadow. And so it means that the price was moving within these ranges, and but it opened, the candle opened and closed at the same position. So usually they appear at the end of the downtrend. So when you see it, when you see the doji, when the price is moving down, and you see the dragonfly, it means that well, what does it mean? That the candle has opened, the buyers keep pushing the price lower, but they didn't find the support there, and finally bulls closed the candle at the price that it was opened. So it also tells us, firstly, that the buyers are losing control over the market, that bulls are testing that they are testing their power over the market and over the price, and that the price didn't fix on the lower level, and it can tell us about the change of trend, and we need to wait for the next candle to appear to prove that that the trend has changed and that the prices are starting to move up. Okay, so also within the candle itself, that's like not that good idea to open the trade, because we are waiting for the second candle to appear after the dragonfly, and only after that, when we see that our our idea concerning the changing trend has been proven, we can open the trade and we can start opening the position for high. Okay, so the most important dragonflies, those one that appear at the bottom of the downtrend. So we are, as I told you, we are waiting for the next one, and only after that we open the trade. And the last one, doji, that I wanted to talk about today, that's the gravestone. Well, I believe that's easy to understand why it was called so. And it's almost the same as the dragonfly, but it appears, and it should be taken into consideration at the uptrend. So let's search for the tombstone. Well, the characteristic is almost the same. It should have small body, long tail, long upper tail, that's the most important, and small to no existent lower tail, I'm sorry. Well, here that's the figure that looks like the tombstone. Small body, long upper tail, small lower tail. That's 1 day range. So let's switch to something shorter and to something more common to us, like euro to American dollar. Well, as the tombstone, also the dragonfly, they appear on the chart not that often, less often than other dojis, but the signal that they give us is pretty strong. So here we see like the candle that reminds us the tombstone. Okay, so we see the pretty small body, especially if compared to the body of the previous candle. Long tail, almost non-existent lower tail, and the color of our candle is red. So it means that the price was opened at the level of almost at the same level as the market has closed. And after that we see like doji and the downtrend for a while. The clear tombstone as well as dragonfly, they appear, as I told, pretty rare, because it happens not that often that the price of the opening and of the closing of the candle is the same. But when they appear, when you see such formation on the market, it means that there is good points to pay attention for the further events, for the further situation on the market, and probably that will be a really good opportunity to enter the trade and to make on that profit. So basically that's the general information that I wanted to point out. So these two candles, these show us that the market is in indecision, and they can mean both as continuation of the trend as well as the change of trend. So the best advice is to pay attention to what's going on right now on the market and to pay attention to what will happen next. These two candles, then they don't tell us that there is a good time to open the trade. They tell us that the market is uncertain and soon the situation to enter the trade can appear pretty good. And so pay attention to them and pay attention to what's going on afterwards. Also, these two patterns, these two candles, they are showing us for the possible change of the trend, especially if they are like looks like this one was no existent body. So, and of course in this case also, that's will be a good decision to wait for the further event, for the further candle to appear, and only after that to pay attention to and only after that to open the trade and to make money. So this one, it's shows us that the trend can change for upper trend, for bullish trend. This one shows us that the trend can be for down, the bearish trend. So basically dojis are important signs of the market, and that's good when you pay attention to them and when you know them. Okay, so for now, that's all that I wanted to tell you about these dojis sign. We also will talk about the other patterns, as well as we spoke about other patterns of the candles. And I wanted to invite you to the Thursday's webinar that will take place also at 11 GMT plus 2. So that will be the trading webinar. In the real time, I'm gonna trade. I'm gonna open the trades, and those who saw my previous webinars probably know that we are making money on that webinars. So please join us, and we will make some money on that. Okay, thank you for your attention, and see you on Thursday. Bye bye.